I'm often asked about a lease to own program for those who may not qualify for a mortgage loan. And as a mortgage loan officer, I need to know those other programs that are out there. So there are some lease to own programs directly through the owner of the home. In other words, they'll rent it or lease it to you with an option to buy. Or there's some programs that are referred to as lease option companies. The one big one that comes to mind for me is called Home Partners of America. You can go to their website and see if that's something that you're interested in. They actually buy the home in their name, they pay cash for it, and then they rent it to you for up to 5 years. What I don't love about Home Partners is that they increase that sales price to you 5% every single year, and it compounds. So if you were buying a home today for $300,000 and you were buying it from them within the next 12 months, they would add 5% or $15,000 to the sales price for you to buy it from them. In the meantime, you're paying a premium on your rent. You've put some down payment monies with them that you may not get back if you decide not to buy that home from them and you move on. It's usually called an option consideration, and it's not really a down payment because there's not an interest in ownership, but instead of it being like a first, last, and security deposit, where that security deposit you may get back if you leave that property in a great condition, an option consideration is usually like you forfeit that money if you don't buy that home. So some pros and cons. If you wanted to look at a rent to own or lease option property, it allows you to move into that property. You don't own it, but you feel like you have a sense of ownership because you're the one that is going to be the end buyer ideally. You just need to fix some things. So who would be an ideal candidate for a rent to own or a lease option? Somebody who is a new business owner, because for traditional financing on a mortgage loan, you typically have to have 2 years worth of tax returns, and we use that income on your net income. So after all those deductions on your business, what you have earned or profited or paid yourself, that's what we use for your income. We have to have an average of 2 years of tax returns. So if you don't quite have 2 years, this would be a great way to secure the home that you'd like to buy, and then you can secure your financing once you qualify. Let's say you're trying to improve your credit profile and you don't qualify for a traditional loan right now through a bank or a mortgage broker. This would be a good program for you. Or you're trying to save some money for your down payment. You have enough for the option consideration, which is sometimes between, say, $3,000 and $10,000, but you may not have your full down payment yet. So that means you are agreeing to rent this property until you buy it from the seller. In most cases, you have an agreed upon dollar amount on that sales price up front, and sometimes that landlord will put some portion of that rent payment towards your down payment or closing costs. They kind of put it aside in a separate savings account for you. So let's say you're paying $2,000 a month towards rent, and they've agreed for that option consideration to put $200 of it aside for you. As long as you've paid your rent payment on time, that means every time you make your monthly payment on time, $200 will get accumulated over here that could go towards discounting that sales price when you go to purchase it from your landlord. So it's pretty cool. And then that down payment, which is referred to as a lease option consideration, that usually turns into a portion of, or maybe even all of, your down payment when you do go to qualify for that traditional financing. And then if you decide you don't want to really own that home, or you're not able to purchase it, let's say you just can't get approval, you have a job transfer, you need to move out of town, something like that where it would just keep you from actually purchasing this home, then you typically forfeit that lease consideration up front. You likely wouldn't get that $200 a month, I used it as an example, towards anything for you. You've just kind of end your lease agreement on good terms with that landlord. Make sure that you're in the time frame that they want. I don't know if you're month to month at that time, or if you have to wait until a certain month of the year for your rental term to be over. Or if you can buy your lease out where maybe you pay 2 months worth of rent to get out of that lease agreement. You would just end it that way, and then of course leave the home in a good condition. A couple of other things I'd like to share about a rent to own or lease option. A lot of times they have in the agreement or that contract that you sign that if anything goes wrong with the property, you're the one responsible. Okay, so not only are you paying top dollar for your rent because of that lease option, but if that air conditioner goes out, if that toilet doesn't stop running, if the roof is leaking, you're typically the one that has to get those repairs made at your cost. So just make sure that you understand that when you do take on a lease option to buy, that it's really no longer like that landlord tenant. Landlord is to repair or fix or replace things that break. It might fall on you. So make sure that you read that agreement very, very carefully. And if you do have questions on it, it might be worth hiring an attorney to review the terms of that agreement. The attorney will probably only charge you a couple $100s to review that contract, and make sure that you understand the terms of that contract, because it could be even more costly if you sign something that you didn't understand or that wasn't a win-win for the landlord and for you. So I just wanted to have a quick overview of what a rent to own or a lease option is. They usually give you a couple years window for you to exercise your option to purchase. And if you don't, then you move on, and hopefully they find somebody else that wants to purchase that home from that landlord, who will pay top dollar for the rent, who will pay top dollar for the purchase price, and live in it as if it's their own, taking care of all of the maintenance and repairs so that the landlord doesn't have to. So it could be a good situation for those people who just need a little extra time to work on their credit, their finances, their down payment, but it doesn't always work well for everybody. So just make sure you know what you're getting yourself into before you enter an agreement like that. If you have any questions, send me an email at questions@creditchristie.com or put them below and I'll answer there too. Thank you so much for watching.